unless the conditions precedent for a decline in gold come to exist, which is to say a balanced budget, positive real interest rates, and the end of quantitative easing, I'm not afraid of another 15 years of stagnant gold prices.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 6th through May 13th, 2024, while supplies last. First, we feature 2023 1-ounce Silver Krugerrand at $3.10 over spot. We also have 1 10th-ounce gold Canadian maples at $29 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always privileged to have this widely followed returning guest. Rick Rule, formerly the CEO of Sprott Asset Management, now the CEO of Rule Investment Media, joins us this Tuesday, May 7th, 2024. Rick, thanks for coming back on Liberty and Finance.
Dunnigan, it's always a pleasure. I've enjoyed this session going back, 3-4 years now. It's great.
4 years, yep. It's been amazing. And it's been a wonderful education for myself and for all of our viewers and subscribers who count on we did another call for questions ahead of your arrival here today. And once again, we have more than we can possibly handle in this short session together. But they sure love that you are willing to be such a good sport about answering their questions. And heck, sometimes you even comment on their comments when they offer them the video, and you often invite them to ask for your grading of their portfolios, et cetera. So we have got all kinds of ways that people can interact, and they appreciate it deeply, as do I. Right now, we've got, this is interesting because you've spoken with us recently in your last visit here about silver being hated, and that you love to find things that are hated if you see intrinsic value there before the masses do, because you know that you have no competition and you love to be in that position. We have a question here from Think For Yourself 8258 who says, Rick, where would you recommend a retail investors to start looking for commodities that are hated or in short supply?
Well, I think you need to look fairly far forward. Natural gas isn't hated, but it's becoming hated. People are impatient for its moving. Lithium is certainly hated. I think it's going to become more hated. But I'm learning about lithium because I think a couple years from now, it will be as hated as uranium was in 2022. I think nickel, in particular, sulfide nickel is hated. I think you'll start to see a move up in the nickel price when, as, and if the problems in the Ukraine stop. The reason for that is that one of the reasons for the nickel price weakness is Russian dishoarding. But the truth is, Dunnigan, if you'll remember back about 3 years ago in interviews that we did for your viewers, that would be the Paleolithic. But anyway, if you look pretty far back, what I said was that I like commodities that are necessary for the ongoing well-being of humankind, but priced on a global market at a discount to their production cost. So you look for something where the pricing is really, truly underwater, knowing that if it continues underwater, the commodity will become unavailable. So if it's a commodity that's needed for, maintaining the lifestyle of the human race, say like uranium, for electricity, and it's priced below the cost of production, you know that either the lights go on or the price goes up. Lithium is not yet below the total cost of production, but I think it's headed that way. And I think the lithium-ion battery is important for the electrification of the world. So I'd be looking at lithium in the future. I'd be looking at platinum and palladium in the future. They're really in the toilets now. And I'd be looking at nickel, natural gas, as a consequence of the fact that it's a byproduct often of oil production, and oil prices are strong, probably doesn't yet qualify as hated because most people look at oil and gas rather than just gas.
Is another way of phrasing what you just said, that you look for commodities that are not only necessary, but where the current economics are unsustainable.
Correct, where the pricing is unsustainably low relative to the cost, including the cost of capital.
Interesting. Now, okay. Let me throw another curveball at you here, in this because you brought it up. You brought up lithium and the battery metals on the one side, then you brought up natural gas, and like you've talked about some of those other more traditional or longer in the tooth commodities on the other side. Some people are trying to position themselves ahead of which way the wind is going to be blowing, and there's the green economy. Okay, everybody's running over to the EV type metals, and they go, wait a minute, this might take a while. But meanwhile, we've abandoned platinum and palladium back there because everybody thought, forget it. Cars are dead. Internal combustion engines are dead. Maybe they're not dead. Let's run back over that way. So, then some people are saying, forget it. Forget both of them. We're going into a global recession. It's going to be so deep and so bad that you're not going to want any of these industrial type commodities, because the whole industrial thing is going to be in a slump for a decade or two. So part of this whole equation that you've proposed here is having a at least fairly accurate assessment of what's needed, what's going to be needed going forward. Sometimes that depends on these mega trends in technology or in macroeconomics that are difficult for an average person to quote unquote get right.
I'm a huge believer in three things. The first is compounding, which requires patience. A lot of investors who don't have a philosophical precept have trouble holding stock over a long weekend. The second thing that I think investors need to remember is that markets work over time. And if you're patient, time works for you. The cure for low prices is always low prices, and the cure for high prices are always high prices. It's difficult for people to understand that. High prices validate the theory that caused them to buy it, and they're loath to sell when prices are high, but they need to be, they need to be around that. The third thing is reversion to mean. We've talked before about, as an example, gold's median market share relative to other savings and investment classes. I don't know where the gold price is going to go. What I know is that in terms of its market share, about 0.5% of the market capitalization of all asset classes of savings and investment assets in the United States is denominated in precious metals. The 4-decade mean is 2%. Will it go to 3% or 4%? In other words, will it overshoot to the upside before settling out to mean? Likely. Will it actually revert to mean? Not exactly, but I'm a huge believer in reversion to mean. Once you start accommodating yourself to three things: patience, which is compounding, the fact that markets work, and reversion to mean, you are less inclined to going and chasing these idiotic fads. In particular, fad chasing is dangerous if you don't know anything about the underlying industries that you're trying to implement those strategies about. So people tell me all kinds of cool things about technology, and I listen to them out of interest because I'm an interested guy, but I don't invest in technology because I don't understand it. People tell me about all kinds of consumer trends. That's great. I love it. I'm glad that there's lots of things that people can buy that make them happier. But I'm disinclined myself to invest in them because I don't understand them. I stick to what I know. And by sticking to what I know, using time, which is to say compounding, the sense that markets work, and the concept of reversion to mean, over the fairly long term, I seem to do okay, irrespective of the fact that I'm not an ambulance chaser or a trend chaser.
We've been focusing largely on natural resources in all of our conversations with you, and now commodities more recently. We have a question from David Landham, 99, who says, how do I know when a stock is a, quote, commodity stock and not just another stock of a zombie company? Is it a percentage of earnings from assets as opposed to percentage of earnings due to the sale of widgets? Are there zombie commodity companies that are over-leveraged? In other words, what's the actual difference between a stock and a commodity stock?
Well, I would suggest that if a company's principal line of business involves the exploration for the development of or the production of commodities, that it's a commodity-centric stock. There certainly were 30 or 40 years ago lots of conglomerates that tried to be all things to all people and manage many businesses. Most of them found they couldn't manage any of them well and went back to some form of focus. But I would suspect that if you can determine from reading the company's annual report that their principal line of business is the exploration for development of or production of commodities that by definition, they're a commodity or commodity-centric stock.
There's a number of questions here about gold and silver specifically. Anthony G 6221 says, "Are you surprised at the lack of gold and silver performance over the past 10 to 15 years? Gold marginally higher from 2011 highs, silver approximately 45% below the 1980/2011 highs. In your opinion, will there be another 10 to 15 years of overall sub-average performance?"
I'm a little surprised, frankly, that gold prices are as low as they are. Perhaps because I lived through the decade of the 70s, and I know what inflation looks like, and I know what stagflation looks like. And I know that the only way out of the fiscal situation that confronts the United States and many other countries is the debasement of the currency. I'm surprised that it has taken as long as it has for investors to come to understand that they need to own some gold and silver. Now, the truth is that if I paid more attention to my own personal history, this would be understandable. As a high school student in 1967, I began to be aware that the debt in the United States and the deficits associated with guns and butter were unsustainable. Did I do anything about it? No, I was a high school student and I was broke. But more importantly, did investors? No. The truth was, it took until 1972 or 1973 before the ravages of inflation had caught up with individual investors. Remember that by 1970, the world had been through 25 years of pretty benign economic climb after the end of World War II. And people were accustomed to think that things got better and better and better. And they didn't pay attention to nagging little problems like debt and deficits until over 5 years, the gasoline price went from 20 cents a gallon to $1 a gallon. Until the price of a hamburger at McDonald's went from $5 to $1, which is to say 20 cents each, to 75 cents each. After 5 years, the perniciousness of inflation became apparent to people, and they began to pay attention to it. So the fact that it's taken people some time after a 40-year period of benign economic climate makes absolute sense to me when I think of it in that context. It's my belief that we have, for the purposes of this discussion, two time frames to talk about, 1982 to 2022, with U.S. dollar hegemony very strong and the interest rate, both nominal and real, falling. And then we have a sea change at the end of 2022 with the interest rate rising. That interest rate rising heralds the beginnings of a new era, one that will survive, but one that will be challenging. The circumstance that we have in front of us, the debt and deficit in the United States, we've seen before. You will not cut spending. That's not what the voters will tolerate. And you won't raise taxes too much. So how do you get out of there? Well, you debase the purchasing power of the currency. In other words, you devalue the debt that you have by printing. In the decade of the 1970s, we devalued the U.S. dollar in terms of the basket of goods and services that Americans live on by over 80%. And of course, that coincided with a meteoric rise in the gold price. The way we get out of stagflation this time is very likely the debasement of the currency that the debt is denominated in. So I think past this prologue. That's a long-winded answer by way of saying no, unless the conditions precedent for a decline in gold come to exist, which is to say a balanced budget, positive real interest rates, and the end of quantitative easing, I'm not afraid of another 15 years of stagnant gold prices.
This is a fascinating question. I hope you'll dig into it for us, because it really picks the brain of some people who, I think, a class of people who would be influential in what you had alluded to before about an unusual divergence from the mean as far as the investment of investable funds into precious metals and precious metals related equities. What would be the trigger for pension and sovereign wealth funds to allocate into gold and silver?
I think the trigger's already occurred. First of all, I think you're seeing more and more disintermediation which is to say selling of the dominant class of assets. I think, ironically, and I know this is counterintuitive, a declining interest rate would bring us to the point where we were nervous about the return of inflation, which normally prompts institutional investors to go to gold and silver. In this particular case, the sense of persistently higher interest rates means that the capitalized value of their long bond portfolio falls at the same time that their cost of funding it or their needs increase. It's disintermediation out of long-term debt that drives the gold price. It's important, I think, for your listeners to recognize that the increase in the gold price that we have seen in the last 2.5 years, from circa $1,800 to $2,300, a 20% move that we're seeing today, hasn't occurred because of institutions, and it hasn't occurred because of individuals. The move that we've seen in gold so far is all about central bank buying. So the only motivated buyer has been the buyer that's afraid of US dollar hegemony. We haven't seen buying that is afraid of the deterioration of the purchasing power of the US dollar. If you look at almost any currency in the world except the US dollar, you will see that gold has broken out into real all-time highs. In US dollar terms, there are some people who suggest that this is a real high, but they forget about constant dollar measurements. For a constant dollar measurement to break out to a high in US dollar terms, I think it's $2,700 or $2,700.50 gold, which I'm confident, sadly, that we'll see.
You mentioned a little while ago about uranium, and also people have been interested in your previous favoring of some opportunities that you saw in either Russian or other overseas stocks. There's one here from Explore One who says, what is Rick's ranking currently of Polymetal after divesting the Russian assets? In his opinion, how soon can they relist on London?
I don't know the answer to the second part of the question. With regards to Polymetal, we are looking at the non-Russian assets, some of which are very attractive, but I don't yet have a rating on it.
All right. So later, folks, when Rick invites you to send in your natural resource portfolios for his ranking, you might have to follow up with that one if you don't have a ranking yet available. This is one that I know you've talked a lot about, because just now you were trying to clarify the difference between nominal price of gold in dollars versus the price it would be or would need to reach if we had a stable dollar. Ricky's House says, what's the definition of a dollar?
Well, Doug Casey famously describes it as a floating abstraction. I'm a little more generous than that. The dollar is a medium of exchange. I would argue it's not a store of value. A medium of exchange that has a legal monopoly on settlements transactions in the United States of America. It is backed by the full faith and credit of the government of the United States, and by extension, your full faith and credit and the government's call on the value of your assets and the value of your earnings. In other words, the dollar is backed by you. You need to decide what kind of collateral that is and what circumstance would be occasioned by a call on the value of the dollar. Maybe Doug's definition is pretty good. After my long-winded definition, a floating abstraction actually sounds pretty good.
I think, some people are hoping for something like 431.25 grains of silver or something like that from the Coinage Act of 1792. But I think that they're really looking for an operational definition. And frankly, as you pointed out earlier in this discussion, with the world becoming very wary of holding on to dollars or dollar-denominated things like treasury bonds and so on, because of the weaponization from the West towards those who it doesn't approve of, I think it's key and critical to be thinking in terms of put yourself in the other person's shoes and what are they thinking the dollar means to them and to their financial future. I don't know if you have any further comments on that from an international perspective.
Dunnigan, I do. Doug Casey also says the dollar is the worst currency in the world, with the sole exception of all the others. We have the deepest and most liquid securities market in the world, the U.S. Treasury market. And for all its faith, the dollar relative to any other fiat currency is pretty good. That means, despite the fact that I know as a saver at current interest rates that I am losing purchasing power on an annual basis, I maintain a fair bit of US dollar liquidity. I consider what is in effect a negative interest rate, which is to say the destruction of some of my purchasing power, as an option payment, because I've learned in my life that having liquidity during momentary panics, during times when there isn't liquidity, gives me the tools and hopefully the courage to take advantage of illiquid situations rather than being taken advantage of or by them. I do not make long-term investments in the US dollar. I'm not a holder of treasuries with a date longer than 2 years. I invest in things where time is on my side, and the dollar is not one of those. But I certainly am a holder of US dollar liquidity, because I suspect that the things I'd like to buy in a panic will be denominated in dollars. I am also a holder of liquidity in gold. But if you are going to be a holder of liquidity in gold, you have to be psychologically willing to sell it. I remember very well in a couple prior panics, clients of mine who had large gold holdings were unwilling to sell it, to use the stored wealth in gold to diversify into asset classes that stood a better chance of performing in the panic. So for those people, their gold wasn't liquidity, particularly in 2008, when, as a consequence of illiquidity, the gold quote fell too. So it's important that if you hold gold for liquidity, which I do, that you maintain the psychological predisposition to be able to sell it, to use some of it to acquire other asset classes that you think will perform better for you.
Also, when you were describing your operational definition of a dollar, you were talking about a medium of exchange. And right now, ever since the last, 2 years, there's been a very vibrant conversation around the sea or tidal shift in the global approach towards what is necessary as a medium of exchange globally. There's this question about the dollar being the world reserve currency. Monty Boy 711 says, why does the world still need a reserve currency?
I suspect because people don't trust each other. You need a medium of exchange that's globally accepted. The dollar is that. I have, from a prior life, a lot of experience with sovereign wealth funds. And I remember conversations with a couple of Asian sovereign wealth funds asking them whether they actually trusted the U.S. government. And they said, of course not, but we trust them more than we trust each other. Some would argue that Bitcoin, as an example, could function as a global medium of exchange. My suspicion is that the float, pick a price, is too small, and that global adoption, is too far away. Others suggest that the BRICS could become the global reserve currency. The trouble is that none of the underlying currencies that would form the BRICS are convertible. So that's a bit of a problem. And as little as those countries trust us, they trust each other less. Can you imagine what the Chinese would feel like if they developed a treasury chest of a couple billion or trillion euros, or not euros, I'm sorry, rubles, and they went to Russia to cash in? That doesn't work. I'm 71 years of age, and I suspect that for the balance of my lifetime, and I intend to live a long time, that the dollar will still be the world's reserve currency, albeit not as dominant as it has been and not as dominant as it is today.
We've got a number of questions here that are fairly specific, so maybe those will just take a moment each, but maybe they'll take longer. This one is one we've talked about before, from Christian Siegel. Rick, being essential for Trilogy metals, do you think the Ambler access road will eventually be permitted after having not been permitted recently?
I absolutely do think that the Ambler Road will be permitted, but I think it'll take 5 years or so. Trilogy needs to do a better job with the native corporations in Alaska. Rural politics in Alaska is controlled by indigenous people. And Trilogy has spent way too much time in Washington, who hate them, and not enough time with the indigenous people of Alaska, who have the political will, and some would say the political franchise, to move the debate along. Can you imagine the woke Democrats acting against the consolidated interests of the tribal corporations in Alaska? Can you imagine the impact that a tribal delegation in regalia and tom-toms might have in Washington, and the ability of the woke elites to stand up against them? Can you imagine the impact in the Alaska state legislature, although that Alaska state legislature is in favor of the road, to stand up to the political forces that run rural Alaska? Trilogy needs to go back to the drawing board, and they need to get the indigenous people, particularly the tribal corporations in Alaska, more solidly on their side.
Christian Siegel also asked, what are your thoughts about newfound gold and the impressive grades they drill?
Very impressive grades and a wonderful exploration job. I'm having a difficult time tying what's clearly a lenticular deposit into one overall deposit. It looks to me like a string of pods. And I'm having a difficult time understanding the economics of that string of pods. As a consequence of that, I don't own it. I will note that a good friend of mine and former business partner of mine, Eric Sprott, who is a legitimate billionaire, feels differently. So you need to listen to both sides of the discussion.
Another one, Carlos Martinez says, what are the things that concern you the most about the drilling program of Hercules Silver this summer?
Well, the thing that I guess worries me the most about Hercules is that they're doing sole risk exploration for a porphyry. Their discovery hole was truly a gaudy hole. But porphyry exploration is not for the faint of heart, nor is it for the poor. One thing that could go wrong is it might not be there. It could be a solid whiff. The second thing that could go wrong is that it might take them 100 holes or 120 holes to find it, and they'll have to continue to dilute. The third circumstance is that their geological thesis might be right, and they might tack it. I have to say, when I looked at the core, when I looked at the bornite in that discovery hole, I got awfully excited.
Slightly different, but still on the topic of specific companies, but this is a class of companies. Monty Boy 711 says, how does Rick feel about publicly traded precious metals dealers such as A-Mark Precious Metals?
I don't think there's anything wrong with publicly listing businesses like A-Mark. I'm not an A-Mark shareholder because they have on occasion employed too much debt on their balance sheet. And I wondered when I looked at their income statement and balance sheet if I was smart enough to run a business like that. I decided that I wasn't. Hopefully, they are. Being public gives a company like A-Mark certain advantages. If they need to go to raise equity, you don't have too much of a discussion over price. The market sets the price, plus or minus 10 or 15%. So I don't have any difficulty with that. And if you believe that there is going to be greatly increased demand for small denomination precious metals in collectors' hands, A-Mark may be the only legitimate way, other than buying physical gold and silver itself, that an investor can participate in the game. I know the people. They're very, very, very high quality business people. As I say, I didn't invest because of their propensity, given the capital intensive nature of their business, to use debt. But it sure worked for them. I mean, they anticipated that 2022 turnaround wonderfully well.
And what you were talking about, potential increase in volume of business, is related to this reversion to mean that you were talking about way back in the beginning about the investable portion of people's investments that are currently not yet returned back into precious metals and so on.
That's correct. I believe the Kaiser family is going to get stinky rich being retail gold and silver salesmen.
Now this would back in your lap, sir. The next few questions are about Battle Bank. We have one viewer saying, I am interested in your Battle Bank. Will you be serving Canadians?
We absolutely will be serving Canadians. Our last effort, EverBank, attracted almost 10% of its deposits from Canadians. So we will absolutely welcome Canadian customers. I only wish we had had our bank charter when Prime Minister Trudeau froze so many accounts of political enemies. My suspicion is that we would have raised $1 billion a week in deposits from Canadians. You can imagine the Prime Minister emailing me saying, I'd like you to freeze all Canadian accounts. You can imagine my response.
I can indeed. Again, on Battle Bank, this viewer, Felix the Cat 69, says, I always ask the same thing. I want to know all the details possible on Battle Bank. Specifically, I want to know what the procedure will be and how to transfer precious metals to vaults, how much fees will be, approximate interest rates for borrowing against metals, etc.
Those are a lot of questions. I would suggest, first of all, either emailing me, rick@ruleinvestmentmedia.com, or going to the Battle Bank website. The approximate interest rate will, of course, be tied to the prime interest rate. It'll be a margin loan. Similarly, deposit interest rates will always be within the top quartile of American bank deposit interest rates, but the real interest rate will fluctuate, of course, with the interest rate market. Should you wish to transfer precious metals to our own storage program, we'll do that, but there's no need to if you don't want to. We will work with as many of the major dealers, retail dealers of bullion as we can, including, I think it's 99.9% certain, Miles Franklin. So to the extent that people would like to avail themselves of the Battle Bank storage program, yes, of course, that's available. But understand that there's no need to do that, even if you wish to borrow against your gold and silver that's in segregated storage. You can leave it right with the dealer that has it now, and we'll still loan against it.
And I think you've probably answered this question way back in the beginning, but in case anything has popped to your mind since you addressed this general question before, it's very pointed right now. E Cognito asks, what are, in Rick's opinion, the most hated assets right now?
I'd have to think about that. We aren't in the grips of a panic right now. Perhaps it would be platinum, palladium, or nickel, simply or lithium, because they were so highly regarded 3 years ago around energy transition. I don't see anything that is as hated as uranium was in 2022. I think 2 years from now, the most hated commodity on the globe will be lithium, because people had such extraordinary expectations for it, and it didn't deliver. You know, there's no hate as sincere as the hate of a jilted lover. And lithium had literally millions of lovers, all of whom have been jilted and will continue to be jilted for a year and a half or 2 years. So my suspicion is, Dunnigan, on your show in 2026, we'll be discussing lithium with a smile, and your listeners will be commenting on social media. Have these old guys, are they really truly demented by now?
Right. That's you've mentioned that in the past, is you have to be willing to be wrong long enough before you get to be right. So you have to have the little bit of a thick skin to relish that ridicule from the masses while you're quietly sopping up all the hated commodities. And that leads us to our grand and glorious concluding question, which is, what do people need to know about the upcoming Rule Symposium on Natural Resource Investing in Boca Raton, Florida, the second week of July there? And why should those who are serious about improving their financial education and their investment performance thereof avail themselves of that conference?
Well, you get a chance to meet Dunnigan Kaiser and his family firsthand. You will also have the opportunity to listen to some great big picture thinkers. Nomi Prinz talking about Wall Street as somebody who was an analyst for Goldman Sachs. Daniela DiMartino Booth talking about the Fed because she was in the Fed. Jim Rickards talking about the structure of Wall Street because he was corporate counsel for long-term capital management that almost brought down Wall Street. Great big picture thinkers who tell you about the way the world is, not the way ABC and CNBC wish it was. Once the worldview is established, great natural resources analysts and portfolio managers, people who have made money for investors in natural resources for 3 decades, not some investment banking hack that failed at technology and failed at supermarket stocks and was put down in gold because it's too small a business for him to hurt anybody, but real pros. Better than that, we've got the living legends, people who have built multi-billion-dollar natural resource companies from scratch, talking about how they did it and how the lessons that they learned make them better investors and make you a better investor too. More importantly, every single exhibitor at the conference has been vetted. The attendees have told us that the exhibitors aren't advertisers, they're content. And the attendees are always right. So every public company that exhibits at that conference has to be owned and accounts managed by myself. Doesn't mean that every stock I buy goes up, but it does mean they've been vetted because I've risked my own money with them. And everybody who's a bullion dealer has to be a bullion dealer that Battle Bank is willing to do business with, which is to say a bullion dealer that in my 30 years at Global Resource Investments in Sprott, I never had a customer complain about. So every exhibitor is vetted. Now, whether you attend live in Boca Raton, which is what I would prefer, or if you attend from the comfort and convenience of your own home via live stream, your tuition is 100% refundable if you don't believe you've got your money's worth. There's no other investment conference in the world that I know of that has a gold-plated, no questions asked, money-back guarantee. So the financial risk is mine. The other thing I need to say, Dunnigan, is that the whole conference, even the workshops, are recorded. And this is important because we're going to give you more programming, between 50 and 58 hours of programming over 4 days, more programming than you could possibly absorb in 4 days. And so you're going to have to come back to the tapes to get full value. I put on the conference last year, and I've replayed the tapes about 4 times since. So the idea that somebody who has a life, unlike me, will be able to get all the information available to them at first pass is a huge mistake. Great big picture thinkers, great analysts, the living legends, vetted exhibitors, tapes, and a full ironclad, gold-plated money-back guarantee.
In addition to the conference, you also have offered free information for those who want to ask you for it about ranking their natural resource investment portfolios.
Absolutely. I've ranked well in excess of 80,000 portfolios now in the last 6 years. Go to ruleinvestmentmedia.com, list your natural resource stocks. Please no crypto, please no tech stocks, please no pot stocks. Just natural resources. I'll rank them 1 to 10 personally, 1 being best, 10 being worst. There's no charge. There's no obligation for this. I'll comment on individual issues where I think my comments might have value. And occasionally, but only occasionally, I'll send you an advertisement to come to my boot camps or my symposium. Anyway, ruleinvestmentmedia.com. List your natural resource stocks. If you're interested in my bank, in the question and comment section, write bank, and I'll send you information on Battle Bank. But I look forward to visiting people at Rule Investment Media and certainly at the upcoming Natural Resources Investment Symposium, July 7 through 11 in Boca Raton, Florida, or in the comfort and convenience of your own home via live stream.
And I look forward, if anyone plans on attending or is considering it, I would look very much forward to meeting you in person in Boca Raton at the Rule Investment Conference. We've been there. This will be my 3rd time in person. Previously, it was virtual in Vancouver when Vancouver wouldn't let us in during that special period of time we all remember well. But other than that, it'll be a great opportunity to get to know each other and ask questions and talk and catch up. So look forward to that as well. And folks, if you don't want to miss a single interview with Rick or any of our other guests, make sure you get on our mailing list. It's free. Just go to libertyandfinance.com, put in your email address, click submit, and then make sure you confirm on the confirming email because we got to get your opt-in. Make sure it's you, not somebody trying to play prank on you, but it's really you. And we'll send you 1 email per day with our latest interviews so that you won't miss any of our interviews. Rick, as always, on behalf of all of our viewers, thank you for joining us on Liberty and Finance.
Always a pleasure. I look forward to hosting the Kaiser family in Boca Raton. Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 6th through May 13th, 2024, while supplies last. First, we feature 2023 1-ounce Silver Krugerrand at $3.10 over spot. We also have 1 10th-ounce gold Canadian maples at $29 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.